Hey everyone, good to be back here with you for cover calls and short puts. My name is Mike Fairborn, joining the chat today by my friend, colleague, longtime, how should we say, investor, trader, 20-year vet of the markets, Brent Moores. Folks, and I did actually get a request from Brent too for this class to do just a quick overview of Thinkorswim Web. We'll do that for both a cover call and a short put today, some practice examples, but I got plenty of examples to take a look at today as we're seeing some general strength in the markets. So it is fantastic to be here with you today. We are joined in the chat by Ken. Hello to you, Ken, Kevin, William, Boss. How's it going, Boss? And Will, Sharon. We've got Naresh, David, Joe, Alaron, Roy, Greg, folks. If you are new to our discussion, just let us know in the chat. Love to welcome you in. It's great to see all of you. I recognize everybody's name, I believe, here right now. So it's great to see you all back. And look forward to any comments you might have. Topic requests as well are also welcome into the chat. With that, let's go ahead and jump into some disclosures so we can get the show on the road. All right, so first off here, options carry a high level of risk. They're not suitable for all investors. Information here is for general information purposes only. While this webcast does discuss technical analysis, other approaches, including fundamental analysis, may assert very different views. Investing does involve risk, including the loss of principal. Now, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Now, an ITM option does have a high risk of being assigned early as well. Please keep that in mind. Now, the paper money software application is for educational purposes only. And as we continue on, there are risks associated with investing in dividend-paying stocks, including but not limited to the risk that stocks may reduce or stop paying dividends. Some of the stocks we'll be looking at today might have dividends tied to them. So let's go ahead and just briefly look at the markets as we get going here. Let's go ahead and just pull up SPX. Broadly speaking, there is our SPX right there, folks. You are reading that correct, that we are getting a bubble over there on the right. And what does that mean? Well, we have a bubble that shows us that we do have an all-time, that is an all-time new high today over the 6,000 mark right there. And really kind of getting upwards of a range of testing a bit of a resistance level range, as you can see right up top here. So a little bit of resistance up top here. We're getting a little bit of that right now. You know, the day's not done, but this is a, well, it's a doji type pattern where you're getting tests off the bottom, right? Rejecting market forces and tests off the top, kind of a tug of war, which you'll oftentimes see at resistance right there. Buyers and sellers, imagine kind of the tug of war going on. If you see this at resistance, a lot of times it's resistance. However, sometimes when it's the trend, in the direction of the trend, which we're seeing here, you may in fact see prices go higher. Sometimes it will go with the trend regardless. You know, you get the little bit of a battle between the bulls and the bears, but the bulls sometimes win off of a flag pattern, kind of a run through, and we'll see what we do get in terms of price action there. Now, I did want to start off first with Thinkorswim Web for those two examples on the cover call and short put that Brent had sent over to us. And so let's go ahead and just, or that request, I should say, I promised I'd cover it in this class. So let's start off first, just broadly speaking, what Thinkorswim Web is kind of quickly here. So first of all, you can get to Thinkorswim Web by going to that URL right there. In fact, I'm just going to copy and paste this right in to the chat box so you can all get to that quickly if you haven't used it already. Now, it is kind of nice because it is not software. It's not a software-based platform. In fact, it is, I mean, in other words, you know, it's not a platform itself. It's the web. We're using the web. And this can be helpful. Let's say, for example, if you're traveling, I used this in Hawaii a couple years ago. I went down to the front desk, jumped on a computer, pulled up Thinkorswim Web, accessed my account, and took a look at some trades. Okay? I was able to do that. You can do that. So in other words, if you don't have access to a computer that allows you to download the software, folks, Thinkorswim Web could be your go-to there. All right, so very quickly, you just go there. It's the same username and password, and there is a paper money and a live account as well associated with it. Let's see, where did mine go? There it is. Okay, so I logged in already. I'm going to show it to you. This is just the demo account. I've signed into the demo account. One just quick note about it, I'll just state this, is you don't need to sign back into Paper Money. You can just click on Paper Money, upper right-hand corner, or live trading. Okay, just as a quick note, Today we're going to be discussing a covered call and a short put as per the request that came through, and we were happy to do that in this class. Let me state this too. I do actually have, as you can see right here, what is interesting is I do have the platform opened up, and I do have Thinkorswim Web opened up in the exact same account. I've checked this out in the live version. You can have two live accounts up. You can have your your standard login, and then your Thinkorswim Web is what I've been able to do. So, having said that, let's talk about the covered call. Now, a quick note on covered calls. And by the way, you might want to look at the chart, of course. As you come over here and take a look at the chart on covered calls, I was just going to say a chart could be very, very helpful as you look at it. All the drawing tools that you've got on Thinkorswim Web or on the platform, you'll see them on both. Even if I did a drawing study here, it would show up on Thinkorswim, the Thinkorswim platform. Just some little side notes there. Let's get into the core of our discussion here. I'm going to throw in a company that could be considered by some to possibly be a covered call type setup. Now, what is that? That's one bar. Okay, there we go. It popped out. Now, this happens to be a 3-year weekly. I'm going to go ahead and just take us to a 1-year, not weekly, but daily. That's where your pricing and periodicities are over on the right-hand side. There are settings and a few other things to look at as well. But you'll notice one thing with this, and if I go down to a 3-year daily, what have we seen on this particular stock? Well, we've seen a lot of sideways action. Now, sometimes, the dividend yield and things can be higher at the bottom, given if that dividend yield continues to be paid, etc. The yield can be high, and some people might say, well, I think it's bottoming here. But maybe it takes a while for, I'm just going to highlight it, possibly. Let's just say there is a shoulder, head, shoulder pattern. We're waiting for it to break out, formulate a bottom over here, and maybe take off to the upside. Well, I've got 100 shares of stock on this company right now in our paper money account. And with that 100 shares of stock, you have to have at least 100 shares of stock in terms of a standard equity options contract to be able to sell one call option. Okay, and the whole idea here is that if the price of the stock does into the future what it has been doing as of late, which is doing what, folks? It's really been slogging around. It's been going down here, sideways, all around, just kind of in a range bound all through here. Not much action going on. Maybe somebody could still collect a dividend, perhaps. That's maybe something it could be doing, maybe another form of income, but maybe a covered call above this range, or they think it might hold within this range at least for the next month or so. So it's a way to maybe generate potential income as prices are going sideways, because there is a very high likelihood that, incredibly high likelihood that if the price of the stock were to go up above that strike price that we're selling the call at, right? First of all, we'll get called away and we'll have to give up our shares of stock if we don't try to close it out beforehand. But if it holds below that level, well, maybe we can just collect the premium and keep our stock. Okay? So a way to do that is just by selling the call. Now, on Thinkorswim Web, to do that, just again, over on the left-hand side, we've got the trade. I'll click on the trade over here. And what you're going to want to do now is go into the option chain. We already have the stock, so all we need to do now is sell that call. Now, generally between 20 to 50 days. Here's a 53 out in January. Now, what some traders will do is they will look for a range where they think the stock will hold within. So I'm going to quickly just go back in. Actually, I could just scoot down. It's so nice. I just use my scroll bar, because on Thinkorswim Web, you've got the chart just below here. Again, we're looking at a web-based setup scenario. But what about 37? Remember those highs I was telling you about? Look at these touch points through here. That's actually 37, very close to 37.50. But look at that. Resistance, resistance, resistance. Maybe somebody thinks it's going to hold within this range over that time frame, and they can collect some additional income. I think, by the way, yeah, the dividends are 11 cents, and that's every 3 months as it's been standing, right? So not a huge dividend, but we'll scroll back up. What do we get for that 37.50? Well, we get 50 cents. It's much higher than the potential, income from the dividend, but there you have it at 50 cents relative to 11 cents. And this is over, until, I guess, expiration. If somebody's trying to collect the full amount, it'd be the third, well, up through that monthly expiration date. So after the third Friday in the month of January. It's a monthly contract. So anyways, to sell that, first of all, calls on the left over here. Still, you can see it right there. Puts on the right. Let's scoot on down and take a look at the 37.50. There's the bid. All we need to do now, folks, is click on that bid. It's just like the platform if you're used to it. Look familiar? Pulls it up right down below. And what I'm going to do is I'm actually going to try to shoot for the 55 cents. Why not? It's paper money. We're having fun. We're enjoying things. 55, not 50. Okay, we'll split it. We'll try to get the mid-range here, right? To generate potentially $55 less any commission charges at expiration. Okay, review is all we need to do. Let's take a look at what we've got down below. We can kind of see some additional information. There is a resulting buying power effect. You can see down here, there's the cost that you could see. I should say the buying power effect is over here. We really don't have an cost charge, because why is that? Well, we're selling that call and we don't have a margin requirement because we already own the underlying stock. Now you have to own that stock to be covered. We're only selling one contract to cover that amount. Okay. If we sold two, we'd be naked, a full contract or equivalent 100 shares of stock. All right, let's go ahead and send that on through. And there it is. We got a fill at, there it is, 55. Well, that is the short call to create a covered call. Now, there was also a question on the short put, putting a short put on. It's going to be very, very similar. And all we're simply going to do is, well, let's put in this symbol, PAYX, for the stock. I'm going to scoot on down and show it to you. There is PAYX. It gave us a weekly chart again. Let's go back to a daily so we can actually see it. But you can see over here that this might be a stock that traders could be looking at for the possibility of a bounce follow through. There have been a number of flag patterns in here, right? I could go through and I could label and flag. I could write in flag. I could do a lot of things here. There, in hindsight, could we get another flag again? We might. We're kind of bouncing off that 140. We've kind of closed that gap right there. And sometimes when you close the gap, then you can get a gap run follow through too. The trend is, well, let's just put a T there and show you the trend has been up. So the probability of the trend could also be working in our favor here as well. Now, why would this work with a short put? Well, a short put is neutral to bullish. So in other words, if the price of the stock were to hold above, let's say a strike price, let's say we're not totally bullish here. We think it could still maybe come up to resistance and maybe bounce around a little bit. Maybe it holds the 140 range. Maybe it doesn't go below that 140, or somewhere close to it. But we think, generally speaking, it will hold in this range over the time frame that we're selling that put. Well, if that's the case and we can hold above here, it's very likely that we are going to be able to just collect that income by expiration, right? And potentially close it out earlier too if we wanted to. But again, you see the trend, right? The trend has had a good follow through with a lot of those sort of flag patterns we've seen coming in here as well. Now, quick note, you could come over here, you could throw studies on as well, just as a side note. You could put on, well, let's see, what don't we have? We don't have the moving average on there, but we could throw a simple moving average. You could type it in here as well. So I'm going to put more of those on the, the platform itself, Thinkorswim platform, but there you go. That's just kind of the short put. Some of the details. I thought I'd mention that because it does happen to be trading above the 10-period moving average of the stocks. I did look at it, and above the 20. Sometimes those can be indications of the short-term and intermediate-term trends, both being up, and that's how sometimes you can spot these companies. All right. Well, let's go ahead and take a look. Again, I'm not going to click on anything. I'm just going to simply scroll up. And where are we looking? Well, let's look up under the option chain first. Let's go to our Januaries. Why not? We saw that 140 level. What do we got about the 140, around the 140 on the put side now? So we could go out. It really kind of depends on what we're looking at. What's our preference? What do we think in terms of the price of the stock holding above a strike price? You do have some other columns over here that you can see. some of those option Greeks. I'm going to go into more of those in just a second, but let's just say we wanted to look at the 135. So let's scroll back down. We're saying we're going to give it quite a bit of range for January. So we think maybe additional support down here, price of the stock we're really giving it a lot of room to go sideways and down and still trying to be profitable and collect that max gain by expiration. So these short puts are very interesting strategies. Prices can do what? Well, we just looked at it. They can go up, they can go sideways, and in this case, because we're selling that put down a little bit lower, they can actually go down as well too. 1, 2, 3, and go 3 directions, holding above that 135 by expiration. We're still likely just to capture that premium. Okay, what was that premium? That premium was about, scroll back up, about 135-ish. Yeah, 135. Oh, there's a range in there. I'm going to just bump this up again. I'm just going to say, let's take it to a 140 here. There we go. Penny wide. Excuse me, penny increment adjustments I can make on that. So I'm tightening that up a little bit. Somebody might even like to go a little bit tighter on that, but we're trying to sell this for basically $140. Remember, now in this case, we do not need to own the underlying stock. We're simply just selling that put contract, hoping to, just letting prices, potentially hold above that range. Remember, that's the neutral aspect. And in this case, it can actually go down a bit, sideways or up to collect what? To collect the max credit right there, less any commissions. You can see that right there. There is a buying power effect over there of about 3,400. You can see as it stands right now. That amount can vary. So I encourage you to go ahead and take a look into these and take, let's pull that back up, and you can see different aspects within Thinkorswim Web. Kind of reviewed it, looked at it, and what we're going to do now is simply just send it on through. There you go. There's the fill right there. We sold it, it looks like 140. Okay, there you have it. Well, that is the review of Thinkorswim Web. Hopefully you found that informative, useful. Again, that is just simply at trade.thinkorswim.com. It'll get you right there. Great place. And that can work too. Sometimes if the platform happens to be down, I've only really seen that platform down maybe once in the last 5 years or so. But if that happens, what I did is I went right to the web and it was just up and running. So it's another good place, kind of as a redundancy website to go to for trading and looking at your trades. All right. With that, let's go back and let's dive into our regular discussion, which is just going to be on the Thinkorswim desktop platform. And so we're right back at it, folks. And today, I really wanted to stick with the short puts specifically. Okay, that's going to be the theme today. One of the reasons is there are a lot of short put kind of bounces. I should say a lot of bounces out there in the market that could be seen as ideal for short puts. And one of the reasons is, and you'll get this, when the 500, that'd be the S&P, for those of you that are just thinking I'm throwing 500 out there, that is the 500, starts to flag, hold support, and bounce up and hit highs with the possibility of running to the end of the year, which we've talked about in this class. Seasonally speaking, that's on average what tends to happen. Tends is a key word. We'll see what does happen there. But when that happens, maybe the short puts can be of interest. And again, it's a great way to try to generate that income where prices can go 3 directions. Okay, 3 directions and still make your max gain. Interesting. It's different from stocks. If we buy stocks, what is it? If we're trying to buy a stock, you can say a stock would be not 3, but 1 direction. It has to go up. If you exclude, I'm talking capital gains, of course, but it has to go up. With the short puts, it can go 3 ways. Okay. Next up, first one. And if you were thinking I might stick with the trend, you were partially right. Maybe the reversal of a trend here. This is going to kind of be one. The reason why I threw this out here on this Global Foundries is because we had a sharp bounce off the bottom, which some traders look at. Notice that. What do we have over there? We have this little thing over here. It's called earnings. And because it's public companies, it's earnings per share right there. It looks as though the market liked that number. And sometimes when earnings surprises the market, you can get a bounce back up, right? You can get the trend to go back up. It's sort of, I gotta say, sort of like a cup and handle. Look at the cup and handle right here. Although you got a little breakage in the cup right there. Then you come back up. But aside from your little breakage, it's a cup and looks like a cup and handle. Now the cup and handle looks for a break above that level. Good day today. In fact, what are we doing today? 4.75%. So not a small move. It's up about 2 points. The market itself, is we're using the ES as a guide up here for the 500. Well, we're just slightly higher. Just slightly higher. So it's having a good day. Could it be positioned to do one of these? If it is the cup and handle, might it? I always like to go like this and just say, could it give us one of these guys, a flag pattern follow through? And where might we see the flag pattern follow through? Right here. Click, click. Look at this. I'm going into my Fibonacci extensions. Great little tool if you haven't used it yet for just price patterns. Where could it go? Well, a lot of times these go up 100% of the move. And I've seen them used a couple of different ways. One way is click, click, pull it down. So simple, right, to do? Where's my 100? Woo! I came dang close. Looky there, right where my question mark is. I was trying to kind of eyeball it, but that's a 100. Sometimes you'll get the 100 there. So in other words, you get a full price retracement. That's where these price patterns can be interesting because they can formulate a target. So nice because you got a tool there to take a look at. But my point is it had been, what's the intermediate term trend, folks? What is the intermediate term trend? Follow the yellow arrow going down. What's the long-term trend? I'd say it's not only down on one front, long-term, I'd say it's down on another front. But then I would also say on the last front, that would be the short-term, I would say it's up. Down, down, up, short-term. What does this strategy account for? Neutrality. Neutral too. We might not be incredibly bullish. We might be, but that's okay too. It could factor in to us capturing, some of that income too. So let's go ahead and take a look at this one and just see where we might be. By the way, another quick note, just while we're at it, what's the other way to do a price pattern projection? Yeah, you can do it off the bottoms, but also off the tops. And this unfolds frequently as well too. I mean, for a price pattern. In other words, click one time off the bottom, click off the top, and just click one more time. That's really 100% this move, and then another 100%. It's kind of like a measured move off the top, isn't it? It's more of a measured move, and that puts us right back up to these resistance levels. Maybe we'd get a run like that. Anyhow, remember the down, down? Yeah, we just showed it. Long-term, intermediate term, but the short-term flipping perhaps on earnings, and sometimes they will flip on earnings. So let's look at the short put area. What strike could we sell at? Let's look at our, I want to look at our puts as well. I mean, our deltas as well, and just see what the delta is. Remember the delta again, what the delta does? We'll just stick with our Jans for now. The delta gives us a sense of, what that option pricing might be based upon the delta. We're on the short put side over here. For every, and basically the delta is for every $1 increase in the price of the underlying stock, the option will move up. The S option range will move up approximately by the amount of the delta. So 20 cents down. If the stock goes up $1, this range of option will move down 20 cents. And that's a positive because we're trying to collect our income here, right? Good solid spread here. This stock trades over 1 million shares. How do you guys like this over here? This is not, whoa, this is not too shabby over here. Where are we? Right there. A lot of times traders are looking for the hundreds range, right? This has 3 zeros. These guys up here, there's 4 ranges in there, right? We're in the thousands. And that can mean better liquidity. And by the way, it's a 5-cent spread on that option right there. 5 cents that I'm seeing right now. I'm sorry, that's a 10-cent spread. What am I thinking? Yeah, it's not 5, that's 10. And so there's your delta. Now remember, this does give an estimation too of, it says, like, for example, 20% chance that the price of the stock will go below 40 at expiration. So the delta has been flipping between 19 and 20. There it is again. The delta can also give us sort of an estimate range as well, using kind of percentages there too, in terms of the chances of it going down, for example. So what do we have though? We're 20 to 40. We're really kind of right at 40. So you got, 40 strike, but then there is your 20 delta. Well, let's take a look at that 40 again, and we'll just see what kind of range we're getting. So that gives us the range. If we're looking at the stock moving to expiration, where at, folks? Where? All the way to 40. So again, it can go sideways, but part of that sideways action is what? Down too. There's down as well. All right, and up. Let's go ahead and throw this in. So there it is right there. I'm going to go ahead and just keep it at 75. Let's just do a confirm and see what we've got. It's just a single contract here. Okay, our break even is 39.25. Max profit. Well, max profit is the credit received less any commissions. There's your max loss. And again, that max loss occurs if the price of the stock goes below the strike price by expiration, or like we said with short options, can be assigned at any time, and the stock goes to zero. The stock would have to go to zero in order for us to see that. And we'd have to hold on to it the whole time, right? There wouldn't be any, there's not, well, as long as the market's open, there might be a chance to get out, obviously, if it went negative. But there you go. There is your margin requirement right there at 425. Okay, I sent it through. There is our first one. Now, I did mention to you that we do have plenty of, well, what do we have? Is the 20 period, we're probably above the 20 on this as well. We are. Okay, so the 20 period moving average, a lot of times when stocks are extending higher, breaking out of a range, they might hold the 20 as support. Just like to the downside, you kind of run into resistance here and here. Look all through here. Resistance, here, here, here. But is it starting to move? Well, it's kind of bouncing off that level. Let's take a look at the next one too. Probably a company you've heard of. They have all kinds of seasonal drinks, right? This time of year. This happens to be Starbucks. Oh, let's see. I've got all kinds of stuff over here. I'm just realizing this is a simple label. Yes, it is a simple label. I didn't mean to. This is from the ThinkScript class. Sorry. Let me take this off here. That's funny. I forgot about that. What? Might just have to kill it. There we go. We can leave the yield on. That should do it for us right there. Okay. By the way, it was kind of cool. You can put these, it's brand new. Talked about this on Friday in the ThinkScript class if you're interested, but upper right-hand corner, you can have labels. Like, for example, dividend yield could be over here if you wanted to, or interesting information. I kind of like everything on this side where you're looking at price. Side note, let's continue on our discussion. But by the way, folks, what do we have here? Now let's look at the long-term trend. Let's get the trends down, and you can see a big gap in here. That's a gap, obviously, to the upside. But okay, so long-term trend. Trend up, what do you say? Longer term? It's over a few months. This is okay. This is August. We've been up really since that time frame. Generally, 2-3 months, you're looking maybe at a long-term trend. We could possibly put a check in there. Intermediate term trend. A good check to go through on these. Check. What about the short-term trend? We just broke above a high range. Short-term trend. Check. As it stands right now, by the way, we're over above this resistance over here as well, not to mention the obvious resistance right in front of us, right there. And we're just kind of ticking above that level. Now, a keynote I do want to state is, what is this big number right there? Has anybody ever seen this? I've seen it over the years, but if a stock can get above 100, sometimes you can see 100 act as a support level. If you're below it, it could act as resistance. And have we seen that resistance? Look through here. Look at that. We just got above it, I could say. Well, Friday, right? That's Friday, the green bar there. So now it could hold support. Could that work for us in a short put type scenario? Think about it, folks. Support at 100. I'm just going to take a look at the chat real quick, See what you guys think. Let's see. Michael, what is the plus sign near the account name? Oh, good question. They just added some code over the weekend. Oh, it looks like a little drop down for uh, the same box that we have over here on the left-hand side. Do you see that? This box? Symbol box, I guess you could say. Oh, yeah, enter symbol. Sorry, it just popped up right there. So that is a good catch. I didn't see that, Thea. Thea. All right. All right. So, breakout in Starbucks. Sometimes these retailers can do, let's do something just kind of fun. How has Starbucks been doing year end? Do they run into the end of the year? It's a seasonal year. And I mean, I know, there's a lot of eating going on. Starbucks would fit into that category. Let's just see what we get in terms of seasonality towards the end of the year on average Starbucks. The average line would be our red line for Starbucks. Do you guys see on average? It could be, things can change on any given year, of course, of course. But what do you see over here? See the red line? Red line would be the average. Sometimes these retailers can be interesting, and they can show strength towards the end of the year. But on average, what do you see? And generally, strength. Now, it's a little bit of a sideways range, but still strength historically for Starbucks. Let me just throw out a 10-year. See what we got. Yeah, you do see the strength. Basically, after November, on average, you are getting a rally up. So we'll see if that continues like that. It is breaking above some highs, and that could be interesting. Again, this is seasonal. This is just on average what tends to happen. It doesn't have to. That average is made up of years that are not positive years. They go down. But on average, you've had stronger years that are influencing that average and pushing prices up. All right. Well, with that, let's go ahead and take a look at the short puts. Okay, Riceberg likes that new feature. Yeah, so it's good eyes on that. If I click the X, does it go away? It does. It goes back to the plus sign. Okay, so it's kind of cool just to have that there. I just mentioned you can have labels in the upper right-hand corner, bottom right, and lower left as well. That is a new feature. That was code that was added in on Friday, or over the weekend, I should say. Any think script, by the way, is not guaranteed for timeliness or accuracy. Little side note there. Okay. You guys following along? We good here? Clear as a bell or clear as mud? Let me know. But yet, when we're selling puts, like we're talking about today, we talked about cover calls earlier, a way to generate potential additional income, right? You might be getting additional income too from, well, what do you have down here? Dividends as well. That's another form of potential income, right? As long as the dividends continue. And of course, yeah, well, we'll leave it there. That's income. But look at this. We are above 100. What delta levels do we have below 100 that might fit into that 2040 range, giving us that estimate, right? Estimated range. Well, here we go. Okay, so this is close. The 95 is close to 20. I'm going to go ahead and keep it. 95 to 100. Let's look at those right now over here and just see what we've got. So 95 to 100, depending upon how aggressive or how bullish you are on this. You still think it might go sideways to up. If you think you're more bullish, maybe you go with the higher strike. More bearish, the lower strike right there. Right? It kind of depends. I sent this out earlier too. This is kind of an interesting reference. I just sent a tweet out on this, but you can take a look and just see how the different sectors have been performing as well. I think that's got discretionary kind of right in the middle range, about 2.37%. Sometimes those will perform well towards the end of the year to the seasonal kind of year-end rallies sometimes that we get. But you can take a look at that. I'm going to go throw this into the chat if you want to take a look at this. Be sure to follow Brent Moore's CS as well. All right, back to the short put on Starbucks. Now, if we do get, what do you guys think? So what do you think? Should we just do a quick poll? Might as well. Let's do it. Let's do it. These are kind of fun. I'm just curious where you guys are. So let's look at, we did have one in the middle. Where would you look at, based upon what we explained in terms of the strength of Starbucks, that is, selling a put? Are you confident the 100, the 97.50, or the 95? Okay. Where to sell short put? Okay. We're going to add a few of these. And here we go. So 100, 97.50, and the 95. And then I will simply just go in and place it based upon the poll. I want to give you guys just a little bit of a little feedback mechanism there, but I'll give it about 20 seconds. All right. Also, how did Starbucks do around earnings over here towards the end of the year? How are they doing relative to expectations? You can just point to that here too and see what they did. Well, they hit expectations, but sometimes when prices go higher, they might have guided higher into the future. They could have seen higher guidance. How have they been doing with that dividend? Well, something to look at. Sometimes when you raise dividends, it's an indication that they have some growth to pay that additional dividend. That was an increase right there. There we have it. Okay, so the 95. Okay, good. And so we are going out into January too. So that gives us more time. I'm just looking at the numbers coming through. I'll go ahead and end that right now and just see what we get and poll. Okay. It just kind of varied right at the end too. Sometimes that'll happen, but there you have it. Ooh, the 95 just makes it by a second. Thanks for those of you that voted, but hopefully those poll numbers showed up. Yeah, very close. And by the way, feel free to go ahead and do a paper trade at the 97.50 or the 100 if you'd like. You can see just kind of a range. It's kind of fun just to see where people are bullish to a little bit more neutral there for sure. So the majority are not bullish, but I would say the majority are more neutral for sure. And you get the mid-range very close. All right. So good enough. Let's do this. Let's jump over here and hit that 95. Spreads, very nice. We're at 4.2 million shares already. Look over here. I know this came in as our poll number, but the poll hit it with into the thousands here. It's very, very tight spread. Now, these could be helpful if in case we wanted to close this out possibly early, right? This does give us that delta that's very, very close to a 20. So obviously a lower chance, you could say, of, or estimation, it estimates a lower chance of it going below that 95 by expiration. That's just an estimate. But let's click on it. There we go. There's our 93. Yeah, you could. I'll try to get 95. Confirm. Let's read it. Okay, it says max profit $95. I just bumped that up at the end. I wanted to just try to round it out at 95. Break even at 94.05. That's right, right? Because that income, potential income, even if there is an assignment on those shares, we still get to keep the premium too, right? So that could lower our break even in case there was assignment. Now, if we do get assignment and Starbucks goes to 0, you can see it right there, right? And then if it goes to 0, well, there's your buying power effect right there. I mean, well, that's the loss, but then you got your buying power effect right there. Okay, very good. Let's send it on through. And there is the fill. Let's just take a look at one more because we do have a little bit more time left. I'd like to go through these. How's Starbucks doing, by the way, on their 20-period moving average? Well, we just kind of bounced off it. Alrighty. You can see that right there. Okay. And just coming above that level, you can see us right there shooting up higher. And let's see what we get on this right now. It's above the 10-period too, probably as you're breaking above highs too. So like we said, short term too. All right. Here is another one. Now, folks, I don't know about you guys, but I'm used to seeing this stock in the 1,000 range. It's so weird because, we did get a massive split over here. What will happen with that? Yeah. When I say massive, 50 to 1. It just seems weird to me to see CMG all the way down here, in the double digits. It's always been, as long as I can recall, it was in the thousands. But hey, I'll tell you what, a 50 to 1 split can do that. It can really do that. All right, let's take a look at this one right now. By the way, while we're at it, bottom right-hand corner of the screen, folks, hit that subscribe button if you're not subscribed to us already. Would love to have you on board so you can get access to all of our classes that come up, and sure and hit that like button if in fact you found something useful, helpful in this class. Now, as we look at this over here, we are breaking above highs right now, and you can see us just extending above there. So kind of a common theme. If I go over here though, and I kind of mentally will go through these steps, but I'm showing them visually to you guys so you can kind of get a sense of, this is just kind of mentally, I just go through this. I looked at the trends so many times. I don't generally tend to write this out, but hey, I'm going to write it out because it's a good little kind of a process to go through just to see short term, intermediate term, long term. What do you think on the longer term? Longer term, this could be a higher low than this. We could be on the verge of a higher high. Intermediate term, where's the 20 period? Well, we've kind of begun to just sort of get above it. Support, well, we dipped below there, but we got a little support there. We're above that again. Short term, just above this level. It's the one I would say longer term. You could say higher low, possibility of a higher high over here. Sometimes you'll just see that if it's really long term. I'm going to say this is a little bit in question, but I will say the intermediate term, you're over it for a few months. In the short term, I mean, here we are, we're bouncing above off the 20. We're clearing a high here, higher highs and higher lows. So at least shorter term, intermediate term, it seems like the trend is there, and that could be favoring us over that shorter term time frame. Okay, bouncing off the 20 here, and a few other things we could look at. All right, resistance though, a clear takeout above resistance. Let's just look at the trade over here and see what we've got in here as well. Now, this has got 7 million shares, 7.4 million shares traded today. We're in the thousands. It's a wider range. These are in penny wide, so we got quite a bit to look at here. So here you go, 20 up to 43 right here. And so what are we looking at? What do we got? We've got 20, 25, 30, 37, 40 in this range. I mean, oftentimes I just low 40s. We could select something within here. But again, where do we think on the chart we might hold up above? I'm going to go ahead and just have to throw this one in. But let's just say 60, for example. I don't know where 60 came in at, but 60's got this level is one area. But notice just below it, at 59, you get the 20 period moving average. Could prices bounce off that level? Maybe so. It could be a support point, right, for prices to bounce off of and possibly go higher. Let's just go ahead and throw that one in. Let's just do the 59. It's kind of towards the bottom end of the range. 90 to 100, pretty good spread. That actually puts us in the 5-digit range right there. So let's do it. Boom. 59. Can I get any more? Well, I'll just go with 90. Okay, so there's 90 cents for our 59 strike. Short put, we're on the short put side. We saw the delta kind of towards the lower range of the delta. Max profit 90, max loss if the stock goes to 0 on assignment. And then our margin requirement about 90, well, real close to 3,000 right there. Let's send that on through. There she goes and already filled. So quite a few in here. You notice how quick. It's funny too, because in paper money, I don't know why, but if it is a tight market, it even in paper money, which is not actually filling, right? But you get that quick, you put it in and you get a fill, which is interesting as well. So, all right, everybody. Well, that about sums it up. We did a good look today at Thinkorswim Web, calls and the puts. Folks, definitely give us a follow on our YouTube channel. Subscribe, bottom right-hand corner. It's nice to be with you. I hope you have a great weekend, a great week. It is a short week and a longer weekend. Have a fantastic Thanksgiving. If I don't see you all until next go around next week, thanks so much for your help, Brent, and we shall see you all next time.